Hi candidates, welcome to another session of manifested online classes. So we are still continuing with the topic of public sector accounting, and in this particular session, I want us to look on IPSAS 26, which deals with the impairment of cash generating asset. Now the first important point for you to note here is that IPSAS 26 is drawn primarily, or is written primarily from IS 36. So meaning that in terms of how we determine the impairment loss under the two standards, IS 36, International Accounting Standard number 36, and IPSAS 21, IPSAS 26, the same approach is used. And if you can be able to recall what we said under IS 36, or in the topic of determining the impairment loss under IS 36, we said impairment loss of those particular assets which are owned by the private owned entities or the profit oriented entities is equal to the carrying amount minus the recoverable amount. The recoverable amount we were determining that as the higher of two values, the net traceable value or the fair value less cost to sell, and the value in use. And the value in use we were determining that as the present value of the estimated what? Cash flow. So that is the same approach which is used under this particular standard what here. But maybe first of all we can say that IPSAS 26 is drawn primarily from IS 36. IS 36. So basically this means that the two standards are the same. Are the same. It's drawn primarily from IS 36, and therefore impairment loss under the two standards, the two standards we are talking of IS 36 and IPSAS 26 is the same. Impairment loss under the two standards is determined in the same way. Let's look on how we determine this particular impairment loss under the two standards. So the impairment loss in this case is always equal to the carrying amount of an asset, or basically the cash generating assets, and then to this we less something called the recoverable amount. So we don't use the word recoverable service amount as we were using under IPSAS 21, but here we talk of recoverable amount. So the carrying amount or the net book value, this is determined in the same way. We take the cost minus what? The accumulated depreciation. But what about the recoverable amount? The recoverable amount. So the recoverable amount, this is defined as the higher of two values. So basically we can say that this is the higher of cash generating assets. Number one, net realizable value, or the fair value less cost to sell. So basically this is the amount the entity will get after selling the asset currently minus the cost which will be incurred in selling that particular asset. We take the higher of that, all over 2, something we refer to as the value in use. The value in what? In use. The value in use. So and basically in this case, when we talk about the value in use of cash generating assets, value in use of cash generating asset, this is equal to the present value of the expected cash flows, expected to be generated to be generated from continued use of the asset, continued use of assets, use of assets, and from its disposal, and from its disposal, and from its disposal. So that is how we define the value in use of a cash generating what? Unit. Recall what we said in our previous session. To determine the value, or basically the value in use of a non-cash generating asset, we define that as the present value of the remaining service potentials of a non-cash generating asset. So therefore, you can see the definition of this particular term here. The value in use under IPSAS 21, IPSAS 26 is different. That is something which is important for you to be able to do what? To note. You may come across a question whereby the examiner is requiring you to define the value in use under IPSAS 21 or under IPSAS 26. You can see the definition is what? Is the same. So I think we can look on additional definitions here, which equally you may be required to define in an exam. Additional definitions. The first term maybe we can start by defining here is a cash generating unit, abbreviated as CGU. So when talk about the cash generating unit, basically we say this is a group of, or actually the smallest group of identifiable assets which are owned by an entity, or which are held by an entity with an objective, with a primary objective of generating some cash flows, which are largely independent from cash flows generated by other what? Assets. So therefore, we can say that this is the smallest identifiable group of assets held by an entity with a primary objective of generating commercial returns, or basically cash flows that are largely independent from cash flows, or basically from other or from commercial returns, cash flows or commercial returns generated by other assets, or group of assets, or group of what? Of assets, or group of assets. So that is how we define a cash generating unit. A group of what? Asset which are held with a primary objective of generating cash flows, which are independent from cash flows which will be generated by other what? Assets. So the other term we also need to define here is maybe we can define the value in use, although I think we have briefly mentioned that here. So we define the value in use of a cash generating asset. And we have said that this value in use of a cash generating unit is quite different from the value in use of a non-cash generating unit, because we have said that this is basically equal to the present value of the expected cash flows. The expected what? Cash flows, which will be generated from the continued use of the asset and also from its disposal. Disposal. So these are basically some of the terms which the examiner, or which you may be required to define in an exam. One of it is the recoverable amount. And in this case, we are talking of the recoverable amount of cash generating assets. Cash generating what? Assets. You may also be required to define this other term here, which is a cash generating unit, and also what you refer as the value in what? In use. But basically what you have said is that IPSAS 26 and also IS 36 basically are the same, meaning that how we determine the impairment loss at the two standards is actually the same. And actually, we don't have any question which has been tested from this particular standard here, whereby the examiner was requiring a candidate or candidates to compute now the impairment loss under IPSAS what? 26. So the questions which are usually tested are questions under IAS what? 36. So most of the questions which come from this particular standard here, they require you to define a number of what? Of terms. Like you can be required to define the cash generating unit, the what you refer as the value in use of cash generating asset, or maybe the recoverable service what? Amount. So that basically is the end of that particular small subtopic regarding a determination of impairment loss of the cash generating assets in accordance with IPSAS 26. So for now, here is today's assignment with the reference to IPSAS 26, impairment of cash generating asset. Explain the following terms. Number 1, value in use. Number 2, recoverable amount. And number 3, a cash generating unit. So that is today's assignment. See you in the next session.